plan would allow Congress to set higher rate for top earners. Framework for tax overhaul slashes corporate rate to 20%. President Donald Trump and Republican leaders will announce their long-awaited tax overhaul plan Wednesday, cutting rates for corporations and pass-through businesses. They'll also propose a top individual rate of 35% but leave to Congress the decision of whether to create a higher bracket for top earners. The rate on corporations would be set at 20%, down from the current 35% rate, and businesses would be allowed to immediately write off their capital spending for at least 5 years. 3 people familiar with the plan told Bloomberg News. The White House didn't respond to a request for comment. The plan will set out 3 tax brackets for individuals, 12%, 25% and 35%, down from the existing 7 rates, which top out at 39.6%. But that's not firmly set, as congressional tax writing committees will be given flexibility to add a 4th rate for the highest earners, an effort to prevent the overhaul from providing too much of a benefit for the wealthy. Congress members haven't signaled that they'll take that option. Key Republicans on the Tax Writing Ways and Means Committee, including Chairman Kevin Brady, have said they're committed to offering across-the-board tax relief. Trump has repeatedly said he's focusing on middle-class individuals. At the same time, though, the tax plan calls for repealing the alternative minimum tax and the estate tax, both of which would be a boon for higher earners and the wealthy. Mute current time 0:00/duration time 0:00 loaded, 0% progress, 0% stream type live remaining time 0:00 playback rate 1 chapters captions settings, opens captions settings dialog captions off. Selected captions. This is a modal window. No compatible source was found for this media. Caption settings dialog beginning of dialog window. Escape will cancel and close the window. Text color white transparency opaque background color black transparency opaque window color black transparency transparent font size 50% text edge style non-font family proportional sans-serif President Trump set to unveil long-awaited tax plan President Trump set to unveil long-awaited tax plans share embed permalink The announcement of the plan, which Trump is expected to tout Wednesday during a speech in Indiana, is the result of a months-long process to craft a tax overhaul that was a key promise in Trump's campaign. But it marks only the start of what could be a brutal fight in Congress among lawmakers who disagree on key elements of the plan. One influential skeptic has been Senate Finance Committee Chairman Orrin Hatch, a Utah Republican, who pledged his committee would not be a rubber stamp for the framework. On the international side, the plan would move toward ending the U.S.'s unique worldwide approach to taxing corporate profits regardless of where they're earned, and focus on multinationals' domestic earnings only. Companies with accumulated offshore profits would be subject to a one-time tax on those earnings, clearing the way for that income to return to the U.S. The rate that would be applied is unclear, but it would vary depending on whether the income was held in cash or less liquid investments. Firms would be able to pay the new tax over several years. Full expensing and other tax terms to know. Quick take glossary. Under current law, companies can defer paying U.S. tax on their offshore earnings until they bring them to the U.S. As a result, U.S. firms have stockpiled an estimated $2.6 trillion in profit offshore. Going forward, the tax writing committees will be responsible for determining ways to prevent companies from shifting U.S. profits overseas. So-called pass-through entities, which include partnerships and limited liability companies, would see their rate capped at 25%. Currently, those businesses, which can range from mom-and-pop grocers to hedge funds, don't pay income tax themselves but pass their income through to their owners, who then pay tax based on their individual income tax rates. While the pass-through rate cut would represent a major tax break for lucrative pass-throughs, tax writers would craft measures aimed at preventing individuals from recharacterizing their personal wages as business income, according to the people, who asked not to be identified because the framework is not yet public. Middle-class benefits. In terms of middle-class benefits, the framework outlines a near doubling of the standard deduction, to $12,000 for individuals and $24,000 for married couples, and calls for significantly increasing the child tax credit from the current $1,000 per child under 17. The tax framework will still lack extensive details about ways to offset its rate cuts with additional revenue. It says most itemized deductions for individuals should be eliminated, without providing specifics, while calling F.